Good morning, traders. It is 7:29, January 16th, 2018. Excuse my voice. I'm still recovering from the celebration Sunday night, so I obviously did a number to my vocal cords. So I apologize for that. um, let's see here. I want to get into right away. Let's looking at how our markets are doing. Kind of take a peek at gold here. Now, if you remember yesterday, I was discussing that black vertical bar on the screen. There is a, actually, let me check something real quick here because I put up a video and second. One sec, guys. I'm sorry. I just want to make sure I can get this here because I believe it is on the site. One second here, folks. Anyways, on the portal, there is a, if you're watching it, if you go to the I believe if you go to the education tab, I did a fresh Windows install yesterday. So if you go to the education library and on this education library, and then there's a how to read John's charts. I believe that's the video. That'll show you how I set up my trading view charts, and should give you an idea of instead of trying to figure out what I'm doing or where the tools are. If you watch that video, it will fill you in. Okay, just wanted to go over that real quick. Now back to gold, XAU USD. I put up this vertical bar here because today is the beginning of a new moon. All right, and when we get to these new moons, remember it was low. It was let's see, full moons are at or near market bottom. So if you think about it, when you get to a full moon, you can buy and have a good chance that price will go up. And if you get to new moons, you can go short and high probabilities of prices going down. And then we have, like right here, we have this market high, obvious market high. In fact, it's a bigger market high. We during this new moon phase back in December, 4 weeks ago, we did not have any sell-off. We just had a buying phase during that moon. That entire 2 weeks, actually. It's holiday weeks. Just get in one direction. But now we're in a new moon phase, and we fell below this angle. We were talking about gold going up, so there is a good short opportunity here to go from with a tighter stop from where we're at now at 113.34.5 down to our support angle. I'll put that in there. say 13.29. Put our stop above 13.39. If we look again on the 8-hour chart, we can see that we are still very extended in our buy zones. We can see this massive divergence here. This is pretty huge. It's really silly, actually. Remember, divergences. We have lower highs, or flat highs here maybe, but we have lower highs in our oscillator, but we have increasing highs in price on our chart. That is a bearish signal. That's when this becomes a leading indicator. All right, so just keep your eye on that. That's a pretty silly divergence. So we should expect some retracement here. I broke this angle. The next angle below it that it's going to have to test is where I kind of put that price target. Okay, now the only trade I had listed yesterday was a euro trade, and that was a short at 122.74, stop at 123.15 until the 120 area. So we went short at what is it, 122.74. So yes, that short is still going and active. I didn't take a position on it yesterday. Full disclosure, I did not take a position. But that trade is still active. In fact, there is an opportunity for a re-entry here. This long-term trend line, well, not long-term, it's from a while ago, from back in the 7th of November. Moving on up here. It crossed above it, came down. We talked about this being in a really massive parabolic move. And I just want to show you something else. The other charting software I use, it's quite spendy, so but it has a lot of other useful tools. And but it shows really clearly these divergences. This is the same chart. This is a 4-hour chart. It's no different than the 4-hour chart on TradingView. But we have the square of 9 dates here. If you remember the square of 9, I think I showed that to you. That's what we got here. Gann square of 9. But on the euro trade, our price levels, according to degrees, we stopped excuse me, right at, we got rejected fairly swiftly. One moment. Phone call from another client. Just let them know. Be with them shortly. We were stopped at 270, and now we're trading below the 240. So our 180 degree area, our natural place of next support, or where we want price to get to when we want to go back in long, is going to be 121.56. Okay. We would like price to get there. So continuing to hold the short from yesterday is fine. Moving that stop to back above the angle here at 122.50, just to put it in profit, get some profit just in case. It's fine. We should see some active support area here. Remember I said one what did I say? 121.56. 121.56 is right inside our support arc. So you know that square of 9 support zone is right below us. We should still have some nice movement down here to test that, hopefully. We do want more of a pullback here. We want to get on some pullback trades. We don't want to get in on it. We want to get further closer to this 45. You know, get a bounce off the support arc before we re-enter long. But again, we do have to be careful because this is a new moon phase that we're going to be that we have starting today, and that means there's a high probability of downtrending prices for a 2-week period. All right, because we are definite. We're at 4 weeks of highs, big highs, 4 weeks of highs from you know, 117 all the way up to almost 123. So you know, we're talking like 600 pips of movement without any real corrective movement. You know, if we're gonna believe in Gann's 50% retracement theory, then we'd have a good move to the south coming up for us to get in on some shorts and then get in on a long pullback. All right, the dollar yen. Now this guy's been a little resilient. I mean, if you notice yesterday, look at this. When we were talking yesterday, and when we got off the air together, not radio, but I said that this angle would be our next support angle, and that's exactly what happened. That is exactly what happened. If you look really closely, if you can see that, let me turn the volume off here. This angle reacted very nicely to support. So, what does that mean? When we get back up to this angle, this trend line here, we should find a little bit of natural resistance, but that's right on another angle that was support and turned into fell out. So now this angle is our resistance angle that we need to get up. We need to get above this to be bullish. If we get above this, angle, that is a good move that we may have back to the top, or at least 50% of the way. So I'm looking to get long on the dollar yen on a break and a retest of this angle, but then I want to be short if I get any test and then no move above that angle. All right, it's kind of a tighter range in here to be going short. There's a better, you know, really our short opportunity is going to be below a break below this angle, and a long is up here. So we have a couple options there, which is nice. It's nice to have two possible entries. But right now, you know, if we look at this, we are really in oversold territory on our oscillators. We're also in its own parabolic move to the south. So let's consider long at let's see, we'll say 110 or 111. With a stop around 110.20. I want to short if on a break of this angle, so we should say conservative entry even from right here would be good. 110. And we only really want to get there on a break and a retest. All right, so we got a couple options there. It'll play out nice for us. But we may see some ping-ponging here, like we see a lot of ping-ponging in markets. Let's look at the New Zealand dollar real quick. We have a rejection of that trend line, and we have, remember this line represents the new moon phase. So we do have some selling here. There's a trend line on the hourly. I thought I put it there, but maybe I didn't. That has been broken. We may be wanting to re-enter it. However, we just got to be careful. We are actually entering a new square Gann box, rather. Okay. So we have a couple areas of trend change based in time. We have our moon cycle, and then we have a Fibonacci time cycle here. But also, I think what I don't think we've done here is done a count. So from the swing low here, how many days is that? All right, yeah, we're getting close to the 60-day reversal. Yep. So 60 days, 30, 60, 90 days from any swing, high or low are good reversal areas. We are at one of those right now. In fact, I bet we might be at one of those in all of these. We're pretty close. We're on a 35-day there. But what are we from here? Yeah. Yep. We probably have a daily 30-day swings. That's good to know. That's our rhythm right now. It's good to know the rhythm of the market you're in. Be generous there. Yeah, generally within 30 days, 30 to 35 days, we see trend changes. So we should expect to see some kind of trend change. Additionally, I mean, again, I am not a huge Elliott wave guy. I am not a big fan of forecasting Elliott waves. I think Elliott waves are good for telling you how far something may go, but I don't think they give you good. I find them more useful for confirmation, or to see the end of some things. So I don't think this would be the most obvious Elliott wave on the planet, your impulse wave. If we go back to the entire year, we have this. Let's see, where do I want to start this? 1, 2, 3, 4, 5. 1, 2, 3. Yeah. Why not? Where did I go? And then we have ourselves a little correction wave here. 1, 2, 3. All right. And then we have our nice little drive up. Where are you at? little tight. Now we're in kind of a funk zone. Break structure a little bit, so we have like a corrective wave here, or we could just say that here's our 5 up here. Maybe this is a little, maybe this will make more sense. Yeah. How's that look? And then, oh, I could have done a triangle wave there. All right. So we have, and if we're looking at things in a bigger picture, then we should see a corrective wave on the longer term starting, because if we just look at, I'm looking at the euro here, folks, sorry. But if we're looking at things in a broader picture, what do we have here? We have a 1, 2, 3, 4. Oops. Oh crap, I was doing that. So right here we have our first move. Then we have that corrective move. And then we have our third leg, corrective move. And then number 5 up here. Okay, I'm trying to kind of mirror what's happening above us, all right? But this is what we have going on. So the most likely scenario is that we have a 1, 2, 3, down to somewhere, I should say somewhere around the 17 handle here. Okay, that should be our pullback range from this very top here. If this is the top of our 5th, we should see a pullback to around this area. So let's kind of keep that up here and keep that in mind on a longer term look. I mean, it could take us till, who knows when to get there. It could take us a while. To June or July maybe, or the rest of the year even. We could move down here the rest of the year. Okay, back to the dollar yen. That's pretty supportive movement here so far. That's good. Yeah, I was looking at also the euro pound is just been this guy's been in this range forever, hasn't he? Oh man. I was discussing this angle last Friday, I believe, and today. Yesterday. I don't even think, maybe I didn't even touch on this yesterday, but we are not able to get a hold above this support, this resistance line. We're not able to hold above this angle. It just keeps getting rejected. It is a very dirty chart. There is just wicks all over the place. But for right now, if we're just paying attention to structure, we are just continuing to bank off inside this. So going long again when it gets to the 88.37 is fine. Long at the 88.37. And then, yeah, really, I'm not interested in going. We'll wait to see what happens. Excuse me. Didn't really take a peek at much else. Everything else was kind of didn't have as great of opportunities. One more look at the year on the hourly before we head over to cryptos. Nice bearish formation right there. We may end up. Sorry about that. I just unplugged. I was moving my chair and I turned around and I unplugged my headset. All right, cryptocurrencies. Oof, man, are they in a devil of an area? Actually, I'm so excited about that area. So we have this wedge on Bitcoin, and we have let me get my actual crypto chart up. All right, we are finally getting some volume in here. That volume is increasing quite a bit. That's awesome, and we have a lot of great momentum and movement, which is fantastic. We need to get some. We really need to get some a catalyst in price movement here. If it's not going to go up, it needs to shift down. And actually, I'm fine with this. I'm really looking forward to this going down. If you hear my cat, oh my gosh, he cries every time my wife leaves. It's the mourn of his people. So we have this new moon phase here. How is this going to affect us long term? We'll see. For the next 2 weeks, usually this signals that we could have a 2 weeks of straight up movement followed by another 2 weeks of straight up movement. But what does this realistically look like? We're just kind of sitting at the bottom of our wedge. We're technically below the wedge, but we have such volume participation in here now that this may be a false break. We'll see. In fact, let's look at our Bollingers. Yeah, we have kind of neutral conditions in our composite index, but we are oversold and pushing oversold in the RSI. Actually, it looks like we may be ending up with a inverse head and shoulders on the RSI, which is kind of cool. That does not happen often. Well, it does, but it doesn't always respond that like you think. So just that we're getting more volume in here and in the whole crypto market is good. We want more money in here. Look at all these coins are just being destroyed left and right. A lot of these altcoins, that's very obvious. Flight weekends selling off before the buyers step back in. It's very, very normal, common kind of movement. So let's go Elliott wavy again. I don't know why I'm on an Elliott wave kick because it's not my favorite thing in the world. But I must like it somewhat if I'm using it. So let's just say that we have this is our first impulse wave, okay? That we just finished our first impulse wave. Then we get into our corrective wave. Where are we at? Okay. So we have our corrective wave. I'm not going to use this. This is a little unrealistic move there. But this is not. Or if we even want to go further, maybe we want to go down to 10. So where could I put the first without this looking really ridiculous? Sometimes I like to work backwards. A little silly. However, you get it. Okay. So really, I think finding a supportive buy zone between 8,000 and 10,000 is fine. Again, I'm going to maintain my long anywhere below 15,000. with those are my ideal areas. There's a lot of weak hands that are going to get shuffled out here. A lot of people are going to freak out. When we get to 10, it won't stop. It'll want to push down to 8, 7,500. I think that's going to be awesome. You're going to get a lot of the new traders. This is this kind of a market because cryptocurrencies are, for a lot of folks, it is the first instrument they have ever traded. They are not used to big swings like the big boys in Forex and futures. And people who have been trading in cryptocurrencies, they have really only experienced easy gains for a whole year. And so if you're a new trader and that's all you've experienced is wins, and you get into this mind, psychologically, this is the most damaging environment for new traders. Cryptocurrencies are going to kill so many accounts because there are very immature traders out there participating in this very, very advanced and market. So the people that have gotten so used to seeing their money grow, and now have been very frustrated with consolidation and further down movement, they are going to be the people selling the rest of us their cheap Bitcoin. So we have to be thankful for that. What they always say that there's 3 kinds of animals in the market. You have your bulls, your bears, and then you have your pigs. And pigs get led to the slaughter. That's not a very nice name, but that, pigs get fattened up, and they get put into a nice little pen up here, and they get to feeling good, and then all of a sudden the bulls and the bears come in and take it from them. So conversely, some people say that then we feed the bulls so that they get nice and fat, and then the bears eat them as steak until we let the bulls graze again and get fat, and then we eat them for steak again. So it's a circle of life. That's why you should never identify yourself as a perma bull or a perma bear, because you would find offense to some of the things I just said. And I hope nobody here identifies themselves as a pig. That is just not a good market animal to be. So, anyways, zooming back down here, I had these 2 areas listed on the by the 16th that we would get to either by 116, 111. I had there that we would get to here if we were going to have further movement. That did happen, and that's working out nicely. I'm expecting this entire zone from here down below to be very responsive to further buyers. But a break of 10, we should get into a nice further supportive buying area. But nice to see all this volume. Wonderful, wonderful volume in here over the last number of hours, ever since 3 o'clock Central Time till now. We've had just excellent volume, which has been very nice. So that's our trade. Again, it's nice to see that we're getting some nice setups going on here in our markets. I'm personally very excited. I like seeing all this volume and return to normalcy. Euro trade, it's coming down very nicely. That's good. I'm telling you, this new moon stuff, this moon cycle stuff is very powerful. I'm loving it. Markets respond to these levels very well, very often. Gold is just, it's just one of those things. If you've never heard this before, you're gonna have one big tool in your toolbox that no other traders really know about. Nobody ever tells you about it, and that is moon phases. And you can find that in TradingView. It's a standard indicator. You don't even have to have the paid version to get this, I believe. But even if you don't have this, even if you don't have the software, then you have Google. Just type in moon phases, and there this gives you a heads up of every single It's going to tell you where every new full moon and every new moon shows up. We have a new moon today. That means any instrument, any chart that is at a swing high, a long-term or short-term swing high, has a high chance of selling off. All right? And so we are seeing evidence of that in a lot of our markets right now. You always have this build-up. This is the end of euphoria in markets. This is how moon phases affect our psychology. If they affect our tides, if they affect 3/4 of the planet's water, actually, well, just 3/4 of the planet is water. If the moon can affect that much of the planet, that mass, why is it outside the realm of possibility that the moon doesn't affect humans as a whole? I worked in mental health for 12 years. I know the moon affects people. So when we get to a new moon, that means a lot of positive sentiment in the news and in our emotions as a whole in societies gets to an end. Up here, this is the apex, and we start to be very negative for the next 2 weeks. Okay? Anyways, enough about that. Hope some of these trades pan out for you. Again, you can find the signals on the portal, and they are there. And it's awesome. We have some trades. I hope some of them have turned out profitable for you. And I won't talk to you tomorrow, actually. I'm gone tomorrow. I'm flying out with my wife to her folks' place. And I'm going to be there for the rest of the week. But I'll be with you guys Thursday and Friday morning. I just won't be there tomorrow morning. We leave at 6 a.m. So, yeah. Anyways, you guys have a great trading day, and we'll talk to you Thursday. I'll try and get some trades in here for you on Thursday before I fly out. If I see any trades, I'll post them in here for you. So I won't be here to talk, but hopefully I'll get some trades in for you. All right. Talk to you later. Bye-bye.